All right, so I was trying to welcome back, guys. Welcome back. I was trying to explain on how to trade these various markets so that each time you are able to identify one, you should be able to know how to trade them. Now, at this particular moment, remember we are at the 1 hour. We trade using time frames. But now, guys, I did not even explain what this red and green thing means. I don't know. Nobody is asking me. Nobody is really asking. Now, these red candles here, what you see here right on your screen, they are called candlesticks. They are called the Japanese candlestick. I sent us the trading whether it's a trading Bible, something like that we could read about candlesticks. I'm going to, if you don't have the notes, you remind me after the meeting. Let me send a note. I'll send you guys a candlestick Bible or the trading Bible. Now, these are candlesticks. These green candlesticks here, they simply represent buyers in the market, while the red candlesticks, they represent sellers in the market. And there are various time frames. You can change the time frames. You can change time frames. Now, what do I mean by you can change time frames? It means you can trade the market at any time that you want. Yes, it's just like you going to the market that you want to go and buy something. You can use 1 second to go there. You can use 5 minutes to go there, 10 seconds. You can use 1 hour, 2 hours, 3 hours. So it's going to depend on how many minutes you want to trade. Now, there are various time frames. When you use higher time frames, they show you the overall, they show you the overall direction of the market. While the medium time frames, the higher time frames, they are the weekly, monthly, yearly time frames. While the mid-range time frames, we have the hourly time frames and let me say the hourly time frames, because and the daily time frames. When we talk about 1 day to weeks and even months, those are higher time frames. Now, we have the smaller time frames. The smaller time frames, they begin from 30 minutes. Those are smaller time frames from 30 minutes downward, but most people use 15 minutes downward. Now, you can enter a trade on the smaller time frames. You use higher time frames to analyze the trades and then now pick entries on the smaller time frames. Guys, if you have not created your account, you ask for the link, or maybe I'll drop it in the description link, the description section or the comment section, where you can just click on the link and you create your account and start trading. You can even join my WhatsApp group wherever you are watching, wherever you are listening for trainings, for these free trainings, more free training videos and one-on-one training with me, so that you can be able to start trading and making profits. All right, guys, I was trying to explain how to trade these various market structures. Now, the market will either take an uptrend, or a downtrend, or a ranging structure. That's why they call it market structure. These are the various ways at which you always see the market. Now, if you are to trade this ranging market, you are supposed to wait for what they call a breakout. A breakout is simply when the trade will either move out, of the support, or it moves out of, either the trade will move out of the support or it moves out of the resistance. Because we have our support here, the trade, when the trade breaks this resistance level, that's where you can trade, or when it breaks the support level, that is where you can trade it. But for scalpers, what would scalpers do? They will wait when it touches here. They will take a buy and make maybe even their 20%. You can still do that for when you want to scalp, then you ought to be very, very careful. Once as you grab a little, you just exit yourself from the market. Then they will wait again. When it bounces again, they buy. Or they wait again. When it bounces, they buy. And this is where they sell. They sell when it touches your resistance. And when it touches your resistance again, they still sell. And remember, this is 1 hour. Just this movement from here to here can give you some small reasonable profit, or you can even make your 20% or your 30%. That is what I told you from the beginning of the video, that you can be able to make your 20% or your 30% with ease. Nobody will need to direct you, or nobody will need to give you signals. And there are also ways at which you can trade any signals that you see. I've already made videos on that. You can go to my YouTube page, my YouTube channel, and follow some of those videos, how to trade any signal that you see. Yes, any signal that you see, you can trade it, but you need to know how to watch to trade them by watching those videos. The videos has a lot of information that you need to follow. You can just see a signal like that and avoid trading it. You can see a signal and still trade the opposite, or you see a signal and know that, no, this signal is really good, let me just follow it the way it is. Now, guys, that is how you can trade a ranging market. Now, let me show you how to trade an uptrend market. This is an example of an uptrend. Now, you simply draw what they call trend line. You simply draw what they call trend line. And this trend line for an uptrend market, you draw it under, down. You draw it under. You draw it under like this. Good. Now, guys, this is an uptrend market right in front of us. How do you trade this uptrend market? Let me now, each time you discover a market going this direction, like this, like what is happening here, now, guys, this is where you take your entries. You take your entries once as your trade touches what? This line. You follow this line. Now, when your trade or your candlesticks touches the line, you take a buy. You go up. Don't go and take a buy at the middle, at this particular area. It is wrong for you to take a buy. So each time you want to take a buy, you take a buy when it touches your trend line. Look at, if you took a buy here, you see you make good profit. You make good profit. You make good profit. And then look at it. What happened? Trend lines can also be broken. Look at what happened here on the trend line. The trend line became broken. It means the trade was no longer following the trend line, and a breakout, the trend line became broken at this particular level. And you see that now the market took a different trend here at this particular level. It started going on a downtrend. So, guys, once as you always notice this huge dump like this, you always don't enter the market short because you have seen the trend line being broken. No, because each time trend lines want to be broken, you will notice that there will be a very huge drop. Look at this long candle here. Yes, and so when it drops like that, when the market drops like that with a lot of force, you have to wait for it to go back up. You have to wait for it to go back up before you can sell again. And remember, if you sold at this particular moment, you would have been making good profits at this level. Now, the most essential thing here is just to know how to trade an uptrend market. So you trade an uptrend market only at the level where the trade touches what? Your trend line. only at the level where the trade touches your trend line. Let me adjust. Like here, this is where you could take an entry at this particular area. And even here, let me adjust the trend line so that we see it very well. This is how it was supposed to look like. Good. So look at what happened. Here you were not too sure. It went, it came, touched the trend line again, went, and so this third touch here would have even confirmed to you that you need to go, because if you look at it very well, if you draw and connect your two higher lows, yes, because these are your higher lows like what I demonstrated first, your higher lows, higher lows, higher lows. These are them forming. So at this particular moment, even at this third point where it touches your trend line, you were supposed to buy. It came again, touch, you ought to buy. And then here, when it touched, look at it went up a little bit before even now breaking the trend line. So that's how you trade an uptrend market. All right, let me go to a downtrend. Let me go look at this. Is another example of a ranging market at this particular level. We can see the market ranging. This is it. And guys, look at when as the breakout occurred. Look at a breakout that occurred, and each time a breakout occurs, there is always what? A very huge reaction in the market. You see a very huge reaction. So if maybe you could identify your points, you drew your lines. You drew your lines at this particular area and waited for this breakout. This is a momentum candle that confirmed the breakout. If you took a short here at this particular moment, you make at least, you make some good profit. Those are huge profit. When you see red candlestick forming very long like that, if you have about $50 in your account, that's when you understand what I'm explaining here. That's when you understand what I am. You cannot understand now because you have not started trading. All right. Let me look for a downtrend market and show us how to trade it. Look at how the market consolidated here. Oh, ask me now, that was the meaning of consolidation. What's the meaning of consolidation? Now, this downtrend market, look at what happened here. Look at what happened here. Guys, this is the downtrend market, and you draw the trend line up and not down. It's a downtrend market. So you are following by this trend line. You follow by the trend line. You follow the trend line. Now, each time you identify your trend line, you draw your trend line. For example, you have drawn from here to here. You see that the trend line, you have connected these two areas. This one here is a fake out. This is what they call fake out. That one, most of these things, you only learn them in my VIP because they are very, very important points that you can take note of in the crypto market while you are trading. It's a fake out because it looks like the market wanted to really go upward, but these are manipulations. They are manipulations that the market is doing at that particular moment. So what your interest is where my trade is going to touch my trend line. That is where I enter. I was supposed to enter here because I drew my trend line and I confirmed that the market came and touched my trend line and reacted downward. So I was supposed to be waiting for it around this point, but it didn't reach. So it went like this and then still finally came to my trend line. From there, the market went down and still came and touched my trend line. And behold, guys, look at even this area here. If maybe you entered immediately, this trade had to touch your trend line. Let me cancel for clear illustration. Draw again the trend line. Somebody is snoring. Jesus Christ of Nazareth. Somebody is attending free meeting and you are snoring until we are getting here.
Oh, no.
This is terrible. My God. Yeah. So guys, you were supposed to sell at this level here. So even if you sold here at this level, you were not too sure. Look at the market will consolidate. Look at the market consolidating here. Market consolidated, and let us see what happened next.
I want to ask something. I want to ask you something.
Look at the market went right down. The market went right down, but at this level, look at this was the area where let me wipe out all these things here. I think we entered at this level. So if you could enter and maybe set your stop loss somewhere, but before the market reaching this particular area, you would have made some good profit that landed you right up to this point if you entered a short. So that's just how you should be trading this various market. All right, questions.
Okay, my question is this consolidation, I think, is something as a ranging market.
Yes, they play the same way. Any question?
So the red candle is a selling market. Then the green candle is a buying market.
Good. So when you see on signals, they will tell you to sell. It means when they will tell you to short, they always use short and long. Short means to sell, while long means to buy. And you always see them there on your app, your trading app. Yes.
Okay.
Then I probably have a question. I don't know which time frame is the best to be used in
At this your level, always use a 1 hour time frame. At this your level,
okay,
you can use, yes, always use 1 hour. Or if you are good enough, you start from 4 hours, at least 4 hours. You can start 4 hours and do your analysis and then come to 15 minutes and take your entry. But I prefer you to use 1 hour. I prefer you to use 1 hour because 1 hour really shows you the direction of the market. It tells you the direction of the market. So you use 1 hour to do your analysis and then you go and pick your entries from 5 minutes or 15 minutes. 5 minutes or 15 minutes. Please, let's ask questions. I want to...
Now, the question I want to ask is...
yes.
When you talk about somebody doing, getting rebates, then trading also, in other words, building capital, what I want to understand, somebody that is capital is $50, and then somebody that's capital is $500. What is the effect since I don't know if he's going to expose the whole 50 or this one is exposing the whole 500. I want to know, I want to understand something there.
I think let me just, all right, let me answer you. Now, if you have $500, let me just explain based on capitals. If you have your $500, you can trade with any amount. You can decide to trade with $2. You can decide to trade with $10. You can decide to trade $100, even the $500. You can decide to trade with $200, any amount that you want to trade with. It depends on you. And if another person is trading with 50 or the person has $50 capital, if the person likes, the person trade with all the capital has a $50 and or the person can decide and trade with $10 or $20. It depends on you. You can trade any you can trade with any amount that you want as far as you have it in your wallet. But now at the level of the rebate will be different. If you have 5 people trading under you, someone has $500, another one has $50, the rebates are not the same. Yes, the rebates are not the same. The rebate comes from what the person is entering the trade with at that particular moment. And then they give you, if your rebate is 15%, means they give you 15% of the trading fee of that person. So if somebody is trading with $50 at once or even $1,000 at once, just imagine the trading fee of $1,000, just 15%, 15% of 1,000. That's when you understand. If you have them like that, about 20 to 50, just imagine how much you'll be seeing in your account daily, even if you are not really trading. But you need to be trading too so that you receive commissions even from your own trade. Yes, you need to be trading so that you should be receiving commission from your own trades and even from the people that are under you. So you need to keep your account busy.
Okay.
Is your question answered?
Yes, yes.
Okay. Please, let's ask questions. I don't really have time. I just managed to squeeze time.
So then we that have not started trading, because I didn't want to do one trade now and see how it goes. Let's say if you send signal now and I have 50 in my account, I have 65 in my account, I can use $5 to trade from that 50, right?
Yes, yes. Yes,
Okay.
it's very possible. It's very possible.
Okay.
If there's a video on how to place signals on coinW, and it is already in my channel, so you guys can follow it. If you don't know how to place a trade yet, just go to my YouTube channel and you follow.
Yes, because I've watched the video on how to place trade.
Okay.
But then what scared me last time you sent the signal was you wrote cross 20x. And I know that cross means that it can cross from, let's say you're trading with $10. It can cross that $10 and go far to enter into your capital.
When you don't have stop loss. When you don't have stop loss.
Okay, so if that person has stop loss, it will not cross, right?
It will not cross.
Okay, I now understand.
So that cross is only risky when you don't have stop loss. As far as you have your stop loss, it is good. And it is also good in the point that once as you are trading with $20, even if you are making $5 profit, you can use that $5 that you're already making as profit to enter another trade while that one is still running. Yes.
Okay.
Any other question? If there's no question, I'm sure we are
Yeah. So please, I have a question on while explaining that my connection was disturbed.
Yes. Continue. Ask your question. Where is he? He's not there again.
Maybe his mic has cut, or maybe his network has
All right, guys.
jammed.
Good night. I'm sure you will drop this question in the group and I'll answer.
All right. Thank you so much. Thank you so much.
Thank you so much, sir. Thank you so much.
Good night.
Okay, same to you. Same day, sir. Good night.
Good night.
Thank you so much.